Hey guys, thanks for being here. Hello, Mark. Thank you so much for being here. Sorry about missing the morning show. I'm sure you guys had other stuff to do, or I had other stuff to do actually, but hopefully it was cool that I missed it. I was busy this morning and I'm exhausted now. If anyone wants any, go get your martini. I'm getting my drugs right here. Caffeine and seltzer water. And I'm exhausted. I'm absolutely exhausted. So anyway, if anyone has any questions, and there's just Mark here, it looks like. But anyway, once people get here, ask questions fast because I have a feeling I'm going to fade fast. All right. I just kicked jacks again. All right. Let's see what's going on. I just had to close out my QuantumScape trade for a $61 loss. Oh, well, you can't win them all. I was trying to take advantage of the call skew. And I did. I mean, I took advantage of the call skew, and I needed the price to go up also. If the price would have gone up, I would have made a little bit extra than I should have otherwise, because I was selling a more expensive option and hedging it with less expensive options. Anyway, price didn't go up. Price went down. So what are you going to do? All right. Yes, my vice is definitely caffeine, but I've had every one of them in the world. All right, PLTW. Yeah, it's a good one, isn't it? All right, let's look at the market. Did anyone catch that Twitter Spaces I did today? It was a good time. We were talking. I was on there with Miss Roundhill, and we were talking about YMAX and ULTY. And I was also on there with that guy named Marcus. He was in New York. I don't know his last name, but I've seen his channel. It begins with an M. He has the same initials as I do. My MM are my initials in real life. But it's Marcus something with an M. He has tons of subs. You guys probably all subscribe to him. Or you guys probably know who he is. He's a big-time YouTuber. I think he's kind of new to the high-yield space, though, so you guys might not know him. All right, so let's get in the middle of this stuff right here. I have a few things planned today, but look at that. That is just freaking beautiful. Look at that. I like that. I really like that. 64.28. Now, these guys that I follow, Geeks of Finance, have been talking about 6,400 since we were at 6,200. That it could act like a magnet, and it darn sure has acted like a magnet. Man, anyway, but they were saying 6,000 was going to happen months ago, whenever, right after the tariffs got taken off the table. And I thought there was no way that would happen, but sure enough, it sure did. All they study is dealer positioning. They study other stuff, but lots of what they're studying is dealer positioning. And they can tell by where the open interest is at different strikes, where they can make a guesstimate as to where the market's going. Anyway, I think they're really good. There's you guys like people in here too. I'm trying to think. Lonesome Trader, who's the guys you like a lot? What's that guy's name? He's really good too. He does a lot of market profile stuff. Anyway, put his name in the comments. He's really good. But I watch a lot of Geeks of Finance. I forget the guy. I just watched him last night. I forget his name. I'm sure he's Mark's put him in the comments if he's back from getting his martini. It is Friday, TGIF, folks. I need more caffeine. I just cannot keep my eyes open. I can't wait to take a nap. You watch, by the time that it comes here in a little bit, when I sign off and it's time for nap time, I'll be wide awake. I'll probably be back in Discord or on Twitter arguing with somebody about erosion or something. You never know. All right. Well, I like that. I always say this every time, but a market that closes on its highs, I mean, my gosh, that's what you want, especially a market that closes on its highs on a Friday. It's a sign of a healthy market. The only reason it's closing for the week on the highs is because it ran out of time. The theory is it would have kept going if it hadn't run out of time. That's a strong market. Just like back in March and April, whenever I was loading up on the inverse funds, we were closing those on our lows. We were underneath crucial moving averages. It just had the feel of exactly what happened. And we got a little pre-warned. We got and we kind of, you guys saw it too. We all saw it and got defensive ahead of that. And that was good. That was good, but now it's back full offense. I mean, that is closing the week on its highs. I just can't tell you what a good sign that is. And leaving bullish open gaps behind you. Look at this bullish open gap right here. There's probably more, but that gap's still open. I mean, but look at all these 1, 2, 3, 4, 5. Look at all that order flow, and it didn't go straight up. There was, I mean, it's a science and art, but my gosh, I like the looks of that. Anyway, so let's do this. Let's look at a weekly chart. Heck yes. Heck yes. Excuse me. I'm going to have to try to get this zoomed in a little bit, but I was trying to show some other examples. But, okay, I'll point to the weeks where we closed on our highs, right? That week on the highs, that week on the highs, that week close to the highs, that week on the highs. And we went sideways for 2 weeks, but then we continued back up. That week we closed close to the highs. This week, which was 5-6 weeks ago, we closed on the dead highs, it looks like. And then the next week on the dead highs. The market's telling you it wants to go up. Now, I'm not listening to it. I mean, I still use my own judgment, and it probably gets in the way. But if you just look at what the market's telling you, it's loud and freaking clear. It wants to go up. Now, it doesn't say how long it wants to go up for, but no promises as to how long it lasts. But that's the closing on the highs deal, and the open gaps are just freaking huge. Look at that. Look at this gigantic open gap on the Qs. A bullish open gap, not a bearish, but that's just, and there's others too. That because these are weekly charts, but that's a gap on the weekly time frame. That's incredible. At this point, even if we do pull back or whatever, it's probably a buying opportunity. We maybe check the prior POC at 523. But anyway, that could still be a couple of good weeks of some down action where we'd want to maybe get defensive. But I mean, it's just so strong right now. I know I'm stating the obvious, but all right. So I guess I'll look at some other stuff. Bitcoin's down 1%, but still relatively high. Now, remember, that's a weekly chart. The 10-year is on the weekly chart. It's junk, straight sideways, but we'll take it. Look at that, AMD. Look at that on the highs. Amazon not on the highs, but it is a green bar. There's ARK. There is Coinbase. That thing's a monster. That thing is an absolute monster. Jackson, what are you chewing on, buddy? Hang on. Yeah, it's fine. It's all right, Jackson. You can have that. He's got the squeaky toy, the squeaker out of the pig. He chewed the pig open during my Twitter spaces, and then he pulled all the stuffing out of the pig. I didn't know those little plastic pigs had stuffing in them, but they do. They're stuffing all over the place, and now he's got the little squeaker, and he's just chewing on it. All right, let's look at, gosh darn, I still have a GME trade open. I'm waiting for this thing to go up. Now remember, these are weekly. We just had a death cross on the weekly time frame, but so these are weekly bars, man. That's just straight sideways for the past 1, 2, 3, 4, 5, 6 weeks. A few doji looking candles, which is a tail on either end, a rejection tail on either end, and a small body in the middle. Well, anyway, hopefully the next move will be up, and it has to happen by next Friday because my options expire. Right now, that trade's up a few bucks, but anyway, all right. So what else can we look at? Let's look over here at the buffer report. I don't show that one often enough. It's a good way to look at some stuff. But I'm going to give you guys a preview of the top 20 list. Because I probably won't have the show on until tonight or tomorrow. Last week, I didn't have it on until Sunday because I think something went wrong. I forget what was going on. Or maybe I was trying to do a different video. I had something come up last week. All right. Well, am I sharing? Yeah, I'm sharing the screen. Okay. Look at Tesla and Tesla finally bouncing a little bit. Snowy looking good. SMCY, SMCI, SMCY, whatever, both looking good. Palty looking good. Pelty, whatever you want to call it. Dizzo leading on the downside. Now, that's what they get for being too woke. I mean, this darn company's too woke. It's go woke, go broke, right? All right. Not Dizzo, but Yieldmax definitely isn't woke. But I meant Disney, the parent company. There's YBIT also leading on the downside. Wow, that's not good. Misty catching just about 98% of the downside there. Coney catching some downside, but it has some to spare because it's been doing well lately. Murny outperforming today, outperforming the parent, as is GUI, as is YMAX, and as is YMAG. Where's Alti? Come on, Alti. What are you doing down here? Up 8 basis points. Come on, that's disgusting. What in the heck? What in the heck, guys? So it has, doesn't Alti have Coinbase in it, and it has Mr. in it, and they're both down. So I guess that explains it. It has at times. I'm so tired. I don't know if the current build does, but I think it does. If not, it has other stocks like that. All right, let's look at the old index buffer report. See what's up the most. It's not going to be feed and 5E today. It's going to be, well, it was 5E. I stand corrected. 5E's a good one. Feed and 5E are good if you like volatility because of the, or if you like concentration, which creates volatility. iSpy looking good. The worst looking SPY-based fund is YSpy. Come on, YSpy. But they may have paid a dividend today or something. This doesn't factor in if a company went X. So I'm not throwing shade at YSpy if anyone's watching that from YSpy, from Granite Shares. AIPI looking good. YMAX and YMAG killing it. They're also concentrated. YMAG especially is concentrated. So, the other ones, gosh darn it, USOY, what are you doing? And what's happening to USO? Come on. Where's all this inflation that was supposed to happen? I'm waiting for this inflation to happen. Come on. All right. Let's see who's here. Like I say, I'm tired. If you guys have any questions or anything you want me to cover, I have 2 or 3 more things to talk about. And but if there's anything you want to talk about, put in the questions. Anything you want to ask me before the weekend, because I'm fixing to peace out. Yes, we all have our vices. Like I said, I've had every one of them, so I'm sympathetic. I've had most every one of them. I've never, I've never had the vice of is smoking cigarettes. Which is a great vice not to have. But other than that one, I got them all. Other than that one, I got them all. All right, so Alti bought for the kids. Nice job, Red Sox. Boy, Alti, is it going to be at 2 billion soon? I wonder if it'll pass Misty. And it's not also just the people who are buying Alti. Yes, people are buying Alti, but also their assets are growing and people are buying them. Now, Misty has a large base of assets, but Misty's been declining lately. So, if the trend continues, maybe Alti will pass Misty someday. Alti's definitely a better fund. I'll say that right now, and I've said that the whole time. You never see me in Misty. I guess I had a little bit of Misty, and I still kept a little bit, but that's when I was delusional and my freaking trading was going terrible back then. But I fell for the Misty thing also. But hell, Alti has Mr. in it, right? And it has Coinbase in it, or lots of times it does. And even if they don't, you can get those through LFGY, and you can get a lot of the other things through GPTY. So you were looking for a link but never saw it. Okay, what link was I supposed to leave a link for Twitter? I didn't find I don't know how to use Twitter. Jonathan sends me a Twitter Spaces that, and I can repost it and it goes in Twitter, but I hit copy and I try to put it in ours in Discord, but it won't share the link. Maybe Discord doesn't let you share Twitter links or something. But yeah, I need to get better at learning how to share the location of it. He sends me a notice, and if I click on it, I can go there. But I guess the notice is just for, I don't know. I don't know why that doesn't work. Let's see here. Anybody thinking of buying MSTW? I mean, not me. Yeah, your dogs use pig ears and hooves. Yeah, we our local feed store has pig snouts, and our dogs love pig snouts. But they'll eat it. But yeah, they. I don't know if we have hoofs. They also have like throats. There's some kind of throat that they eat. It's like a dried esophagus or something. But they love that as well. You got some good discounts on crypto ETFs today. Yeah. So that's why Alti was down. Alti is heavily DeFi based, or not down, but not up as much as the other stuff. Happy Distribution Friday, Norman. I hope you're having a great afternoon out there on the West Coast. It's only 12:51 out there. You guys are so lucky. I love the West Coast. I don't care what anyone says. If I couldn't live in Austin, I'd live on the West Coast. Quality of life is just really high out there, but it's really high in Austin as well. And I know it's really high in Florida and in Virginia, and I know it's really high on the East Coast as well too. If I couldn't live on the West Coast, if I had to live on the East Coast, I'm trying to think. Money not being an object, probably Miami, West Palm. But money, but I think Maryland and the DC area, Northern Virginia or Maryland, that place that's expensive too. Would be nice, or Connecticut, or New Jersey. I like suburbs. I like suburbs. I think I'd fit in fine in New Jersey, Connecticut, Florida, also. But the suburb capital of the world is California. I don't care what anyone says. I mean, you have so many great burbs out there, between Manhattan Beach to Santa Monica, Pacific Palisades, Palos Verdes, Laguna Beach. I love it out there. My dad lives on Coronado Island. Is incredible. I mean, Del Mar. Del Mar's not really a suburb, but anyway, yeah. Fort Myers in the winter. Of course, I live in Texas, so I have the winter covered. I mean, a lot of people from Chicago and stuff come down here to South Texas, a lot of snowbirds and stuff, and camp on our rivers and stuff. But yeah, Fort Myers would be great for the winter. But I think if I had to live in a suburb on the East Coast, it'd probably be somewhere Northern Virginia or Maryland outside of DC, or Connecticut or New Jersey. All right. Yeah, I bet Connecticut is great in the summer. I bet it is. The people around here in the summer people I know around here go to Aspen and Colorado. That's a good thing about California also, is California has some places, especially if you're on the ocean, can kind of have coolish summers. It can get pretty hot in Southern California too. Anyway, all right. Red Sox. I try to avoid selling anything for a loss, although I dumped Morrow today. Well, I'm sorry about that, but all right. So let's see. What else do I have to show you guys? Okay. So this is this is what I want to talk about. Well, we don't have to. Well, let's talk about this first. Did you guys see this? I want to thank Marcus Skeptic for posting this. Defiance is releasing an SCHD target 15 income. I like the idea of this because I love growth, and SCHD, I don't know how they choose their companies by dividend growth, but I like fundamentals, good solid companies that pay a dividend. I love that story. I don't like how SCHD doesn't pay a very high dividend, but now they're just going to be selling options on. I would think this would be a competitor for maybe that QUSA or maybe Omaha. I think this is going to be a more boring type situation, but it might be good. I saw a really good video the other day about dividend growth, and this video was saying it's kind of a scam. And I haven't done my independent research, but let's check it out real quick. Let's go to, what's it called? True real yield or real true yield or something like that. I mean, real true yield. There's what I was going to say is that's not it. There's something that you guys use all the time, but this guy, I think it was Average Joe. He does a lot of good projections and charts and stuff, and he was showing how much better, dividend or funds to pay distributions, like the ones we're all into, do compared to dividend growth. And a lot of dividend growth companies are dividend traps. Dividend kings can be dividend traps. Let me try to show it myself. I mean, I know what he was saying. So that's my one reservation on those. Lots of times companies that pay a big dividend, it's because they don't have anything. The fear is, hey, we don't have anything better to do with our money. So a lot of companies in that circumstance, they either buy their own shares back, which is good because that creates less shares. I mean, I like that idea. Or they pay a large dividend, or they do both, like Apple. Apple pays a decent dividend and gives money back. And that's not the only reason, but that's what a yield trap really is. This is a company that doesn't have any innovation, not really growing, but they pay a nice dividend. Say maybe they're a utility company and they can't really move their prices up too much or whatever. So that's what a yield trap is. True real yield or whatever, but let's do this. Let's go to SCHD and let's compare it to JEPI. That's and we'll go back a long time. Let's go back to, JEPI came out in 2020. Let's compare it to QYLD or XYLD, I guess, and go back to 2013. But I agreed with what Average Joe Finance was saying. He's basically saying that dividend growth, even these dividend kings and stuff that have raised their dividend every year for 30 years and stuff, if you look, a lot of them have had negative NAV growth. And I know that none of us like negative NAV growth. I certainly don't. But I was just going to see what kind of NAV growth SCHD had. So this is going back to, SCHD hasn't been around that long. It can only go back as far as around as SCHD. When did SCHD come in to existence? I guess we know because it's going to be, was it really? Oh, no. Okay. SCHD has been around forever. Okay. Because the 2013 is when XYLD came. Okay. So since 2013, SCHD had NAV at 10 and now it's at 27. I mean, the good news, you got $7 of dividends, but I mean, it's not the most appealing investment, but maybe if they could sell covered calls on top of this, it'd be somewhat appealing. Now, by comparison, it's more appealing than XYLD, I guess you could say. Started at 39 and is still at 39, but they did pay $39 worth of dividends. So they paid 100% of their initial cost in dividends, but hell, SCHD paid 70 or about 70% of their initial cost in dividends. So anyway, I don't know what to think about that, but I mean, I like to have other choices. All right. So thank you, Marcus, for putting that up. It's interesting. I still don't have a handle on this one. I have no idea. I've been thinking about this. The Defiance NASDAQ 100 double short hedge. And here's what I think. I don't think they're going to mess with options. I think they're just going to short the securities because here's what they're trying to take advantage of. These have volatility erosion, and it's caused by the daily rebalancing. These get triple the upside on a daily basis. But if you go up 1% one day, down 1% the next day, and then whatever you can do series. It depends on your path dependency, and you won't be up as much as you would have thought. You don't really get triple any period of more than a day. So they want to short that. I think they'll just short the stocks and try to take advantage of that underperformance. And then they'll hedge themselves by shorting the stock on the other side. And maybe they'll use options because it does say double short hedge, maybe to knock off some exogenous risk or something. But since they're going to be a pair, I don't think there'll be a lot of risk. But yeah, I think that's why I can't test it. I think these guys are just going to short both sides and wait a couple of weeks and let the volatility erosion take place. And if they're short the stock on both sides, the TQQs and the SQQs, since they're short the stocks, they're monetizing that volatility erosion. So That's going to be interesting, but I don't think I can back test it. But that's my newest. That's how I think they're going to do it. Jay's due to come on again. When was the last time we had him on? I think June. And he was on like late May or June, so July, August, September. So I'll have him on again in September. I need to call him in August and set it up about a month in advance. He's getting so popular and there's bigger influence. It used to be easy. I could call up Jay and I could get on next week, but not anymore. All right, let's see I want to make sure I'm not missing anything. Yeah, Florida's awesome. I like Florida. You know what? I left a place off there that I think I could be real comfortable, and I totally forgot about it. And I've never even visited there, but I really think I could be comfortable in Nashville. There's lots of music and guitar. There's good guitar shops out there for me to peruse. There's great guitar shops here in Austin too, but Nashville has the hills, country music. Even though it's not the kind of country music I like this kind of country down here. But still, I think I could be. And Nashville also has the Austin thing going on where it's a hot place to be. And people love it. And there's a lot of good looking girls there and a lot of, I like that. I like the kind of place where everything's happening. So yeah, Nashville or Miami. If I had to leave Austin, to be Nashville, Miami, or probably San Diego or Orange County somewhere. I mean, I agree that LA County may be, a little bit too much, but I mean, I could be real comfortable in Orange County. I promise you. Down there, and I was born in Oceanside, or I was born in Camp Pendleton. I lived in Oceanside till I was 3 or 4. I don't remember it, but anyway. But yeah, I forgot to mention Nashville. All right, let me catch up with the rest of these. May remove to Tennessee. Well, good, Mark. I'm going to go out there too, and I'll at least visit. And I'm going to bring my guitar, and I want to jam. I want to jam a little bit. When I lived in Norman, I had Gray, Oklahoma. I had all my friends were guitar players, and I played a lot, but I don't have anyone to play with down here. But I take YouTube lessons. But I'm just trying to read these to make sure none of these are directed to me. Okay, Ofer, thank you for being here. Did you happen to read the interview with the chief Vanguard analyst? He claims we should invest in internationals and fast. Well, no, I didn't. I did not do that. I'm going to try to focus on yielding things in this format, but for yielding things with international exposure, what choices do we have? We have that IDVO, right? IDVO. And there's other ones. I guess we have the CLIP. I mean, but that's China, but it's, and there's probably other ones. But yeah, I'm all about international. If I could find some good international yield funds, and I'll put them in the max factor, and if they get up to the top, I'm going to start investing myself in whatever the top of the max factor is. And that's what we're going to talk about next is the max factor, so stick around. Wait until interest rate cuts, yeah. Okay, and what's Froggy saying? Nashville's a great city, but it's the lakes and the hills and stuff. The stuff I love about West Austin, when I see Nashville on TV, it's all the same stuff. Lakes and the hills and it's a lot of the same stuff. It reminds me of Austin. So top choice is Knoxville or Brevard. All right. I bought some SYLD. LSA. Well, that's nice. What's SYLD? SYLD and LSE. Okay. Well, I'll look at that. I'm just going to look really quick. It's SYLD. Oh, wow. Okay, I haven't even heard of this. How much does it yield more than 6? Only yields 1.97. I'm sure it's a great ETF. I'm just giving up. It has 11% growth. Okay, so I'll look at LSE. I've seen LSE before, but if I can't remember what it is, I have to look it up. LSE. What's LSE? I know what it is. And I wasn't going that way with it. Okay. Well, what do we have here? No yield. It's up 8% for the quarter. Super steady looking. All right. Let's see. Let's get back over here. Marcus mentioned something. Oh, Global X is SYLD. Okay. I think I got I'll check it out again. Okay, let me look at that. Did I not type that in right? SYLD. Yeah, it's Cambria. That I maybe. I don't know. All right, I need you guys' opinion on something. I asked you guys this the other day, but okay, so max factor. I have competing lists, but I know I did the other day, and I decided I was going to go with the one list that was more wild. I mean, that put COIW on it. But then I was doing that again today, and now I've built another second list because I cannot get around wanting to show some kind of risk-adjusted performance. But here's what I got. Here's what I have, I should say. All right, we don't have to expose them. I just have them already done. Okay, the one on the left is sorted by max factor points, and the max factor is the new formula and that I showed the other day. And anyway, COIW is at the top, and I mean, why not? I mean, that thing's a monster. I mean, you have 79% NAV return and 40% yield. I mean, Huey's number 2. I mean, I'm fine. Okay, that's great. But then when I was doing this, I was still thinking, wonder if we took this ranking. I like this ranking as a place to start off with, but wonder if we did factor in the risk, but with this. And because what I'm afraid I'm doing is I don't want a list just to output the highest beta. Because lots of times they say money managers get rewarded for beta. Whenever you're picking, if you just pick the most volatile stocks and you happen to be in a good time in the market, so the market's going up, you're going to do better than the market, but it doesn't have anything to do with your stock picking ability. It's just because you've put the most risk on. And I'm thinking that may be kind of what this list is doing, just putting the most risk on. And I'm going to start allocating. I'm going to start putting the top 5 every month in the model portfolio. And anyway, I really am. But so I'm thinking about it. I'd be fine this month with adding COIW, just 3%, maybe 5%, either 3 or 5, but COIW, I've even thought about doing the top 10, 2% each. But COIW, Huey I'd be fine with COIW, Huey, NVDW, AMD, and NVDY. Okay, but when I added a simple one other factor, and I factored out, I gave extra credit for something that was less volatile. To me, if you have, something that yields 100% and its NAV is up 10%, and you have 2 stocks like that, stock A and stock B, okay? Yields 100%, its NAV is up 10%. That's great. But let's say stock A moves on average 5% a day. So it's up 10%, but it's really just 2 days up because it moves so much. But then you have stock B that only moves 1% a day. It's more impressive that stock B, it's because it's less volatile, to be doing just as well. So that's what I did. I factored out the for daily true range. And these are pretty good also. I think list 2 is pretty good. I called it the scaredy cat for now. And I'm thinking about maybe just having both of them. Having the max factor, or maybe calling one growth and one income. But that's not really, I don't know, growth and income's right, but growth and safety are same. But anyway, or I may just go with the scaredy cat. So the scaredy cat's pretty good too. NVDW is number 1. And heck, it was number 3 on the other. It's good either way you look at it. NVDY, number 2, and it was number 5 on the other one. And then I love that QDT got in here because that is a really good one. Over here, this number, I should have had this number being the NAV return. So that's not only 6% NAV return. That's the actual scaredy cat index. I need to fix that. But QDTE, I think his NAV return is 9 or 10%. But I mean, it makes a 41% yield, and it doesn't have a large daily true range, meaning it's not very volatile, meaning that it's impressive. It's super impressive to me that, anyway, then there's AMDY, and it's 4th on both lists. And then there's NVDY. We've already been over that. And COIW is still on the list, and I would still be buying it. I just don't know about leading with the one that's probably, I mean, if you think about this, it's definitely Coinbase. This is the highest beta underlying probably, or one of the highest beta underlines. We've been in a face-ripping rally for Coinbase. I mean, so is it really the best high-yield fund? And I'm saying, yeah, maybe, but NVDW, NVDY, QDTE, AMD. See, I think it's a toss-up. And so I don't know. I don't know what I'm going to do. I'll figure it out before I have the top 20 reveal show that's on this weekend. But you guys saw a preview of it. So I'll take suggestions in the comments. You guys might not even care or whatever. But if you have a suggestion, I'd be happy to listen to it. Did you like list A or list B better? If you want to put it in the comments, put it in the comments. B was the safer one, and A was the one with COIW at the top. All right, so that's basically all I had planned to say. I think, yeah. I'm trying to find the darn screen. Did I shut the screen? Gosh darn it. There it is. Okay. What are you saying, Red Sox? Been nice to have COIW in the 30s. Yeah. Yeah. So, Mark, you're saying you currently own 24,000 shares, multiple accounts. Was that ULTY or no? That's COIW, isn't it? Or I can't keep up with Mark's holdings, but all right. Let me go up here and try to catch up with what you guys are saying. Okay. Mark said, "Yeah, man, I bought COIW today." And I knew that. Well, wait a second here. London Stock Exchange. Okay. I got you. I got you now. SYLD on the London Exchange. Perfect. Are you from Europe, Ofer? That's kick ass. All right. You have an old buddy just outside Oak Ridge. He's on me about coming down in the fall to check out the area. Yeah. Yeah. If I that looks like a great area of the world also. So Mark bought 1,500 COIW today. That thing's a monster. Okay, so Ofer, what are you saying? The German DAX left the S&P 500 in the dust this year? Yeah, they already cut interest rates over there. Maybe we'll play catch up once we start cutting or something. I mean, if I went all in on Europe, it'd be my luck. I'd be buying the top of Europe and selling right before. Anyway, I just hope this rally continues through the end of the year. I don't know it will, but we'll take it one day at a time. The thing is, Max, COIW is up 100%. Yeah, so now I know it. That's what I thought also, but I'm mining data from here, and COIW. Yeah, I thought, in fact, I came on and announced it the other day. I thought it was 121 or something, but then this is just saying 71 today, or it's still more. That's still beating anything else. I figured maybe they went ex-dividend or maybe they pulled back. I didn't know, but COIW is still going to be. I mean, maybe I need to find a new source for data mining. This is not really up 79% this quarter. Maybe FinViz is a day behind. But yeah, I've seen a higher number on that too, and I actually noticed that, and I didn't think any of you guys would be sharp enough to notice that, but I thought actually I did. COIW, but remember, I revamped my whole system so COIW be included. So it's first on one and it's fifth on the other. So it's definitely, I think either of them are closer than they were. And I apologize, the last system wasn't as robust, or the last algorithm wasn't as robust as we would have hoped. So let's look at COIW versus Coinbase. Look at that. So I guess that's COIW's inception date, 2/19. So, okay, but yeah, Mark said this quarter, so let's go get this quarter out of here. So July, June, so it probably is June, July. Oh no, it's April. April, and it's probably going off yesterday's 24th. It's probably is I get that it's maybe a day behind, but yeah, it is a big difference. I was wondering what the heck was going on myself, but it's a good time to address this. Okay. It's beating the underline. You got to love that. Beating the underline without reinvesting dividends. Come on. Would you look at that? That's incredible. Anyway, okay. So on here, it's showing 59 and 32. So that's not more than 100 on just NAV, because it would have to be over 64 to be more than 100. But I saw up 120 number somewhere. Maybe that was total return that I saw and I conflated it or something. I don't know. but it's doing well in either event. You could see it does appear to be about 80% using this. Now, Coney is not even double the NAV in the quarter, but they're also up. They don't look like they're up as much. Well, they have. Coinbase doesn't pay a dividend, so they're up whatever this says. Well, they don't tell you just NAV return on this. They show 94% total return, but since they don't pay a dividend, that is their NAV return. So, yeah, that's right, because 406 would be 100%, and they're 396. Yeah, they're 95%. Perfect. That is right. Okay, so actually Coinbase's NAV is beating COIW, and that has to be the way it is, beating COIW's NAV. I mean, but that's what we'd expect. And it's not beating it by a whole lot. COIW is up 80% on NAV alone. COIN is up 95% on NAV alone. But it's this glorious dividend, this $7.25. That's just for a quarter of a year. Heck yeah. You know, what's that going to be? $30 for a year on an investment that just cost you $30 now. But the thing is, since it's going up, if you bought it today, which is fine, but your effective yield is, you can't really tell for sure, but it's going to be more like 50% just because you got some shares at the higher price. And that's if everything stays the same, which it won't. Anyway, but yeah, COIW is a monster. But if I had, there maybe there's bad data in FinViz or something. I'll fix it before I do that. This show isn't the official show. This was just a warm-up show. So yeah, total return definitely over 100. Yeah, I was talking about NAV return, but I look at both to make both indexes. I look at total return and I look at NAV return to make index A. That's all I look at. I don't factor in safety at all. Index B is total return, NAV return, and average true range, or in other words, volatility. And I try to pull some risk-adjusted return out of it. But like they're both good. Fifth or first is great, in my opinion. All right, we are limited to our own exchange, but there's ways to work around that if you really want to, yeah. Because there's lots of Canadian stocks I see on the internet that Summit Man has access to that, you know, do covered calls and do 30% margin and stuff, and that people up there love those. So hell yeah, or heck yeah. Hey, SB, thank you so much for showing up. Hope you had a good week trading. Hope everyone had a good week trading. All right, so Ofer, what are you saying here? The new German chancellor was a senior executive in a senior executive in the company you were probably, or in the stock exchange or whatever. So it's going to be good for, he was probably a senior executive on the LSE or of the DAX or something. I'm just trying to use contextual clues. All right, guys. Well, he was a senior at BlackRock. Wow. All right, guys. Well, I'm running out of stuff to talk about, and I'm tired. I'm exhausted. So if you guys don't think of anything else to talk about, I'm going to rest for a little while. But I appreciate you guys being here this week. While I'm waiting to see if you guys have anything else. Last week I did I think you guys kind of like this. We looked at it froze and stuff last week, but the station's doing a lot better. So I wanted to see let's see how it's doing. I really think this is, like I say, I really think it's Jonathan's fault. It's also, I've been trying to make a little bit better content, and I really think the good and bad in Alti was really good. Look, that thing got almost 2,000 views. That never happens to me. 36 comments, 97% likes. I think Justin Sports Car gave me a thumbs down. I don't know, but he had kind of a critical comment, but that's fine. I mean, I may deserve it. I probably do. All right. So the mechanics of the lightning spread. This one was not a barn burner, and I didn't expect it to be. And look, the thumbnail says options are like life. That's not going to get any views. I can tell you that right now. But anyway, all right. Let's look at my analytics, though. I was really proud of this. Estimated revenue, $39. I have to make $100 or I don't get a check So I have 6 days to do it. So I'm going to be putting out videos like crazy. But they don't pay you. I'll get it next time. But if I make 90 this month, and then I used to get paid every month. Nowadays, sometimes I don't get paid. But anyway, it was the good, the bad, the alti. Look at that. That video, I worked all day on it, but I'll be damned. I made $4.80, or no, I made $8.21 on it, which is awesome. I mean, that's awesome. Let's see what this video was. I did pretty good on the LevMax video. Yield Max Boss talks about a new ETF, and I just reviewed a coach's video, and I was talking about the LevMax product, which I think people were interested in. But anyway, yeah, there's lots of days I sit in here. Wednesday, July 9th, I work all day on all these days, but doing AI and stuff, make 27 cents. Anyway, what's really going well is this. Check this out. I'm killing it on this. So just a few days ago, I was at 3,694 subscribers. And, 2 weeks before that, I was basically at the same number. But then I went from 3,694 to 3,747. What is that? 50 new subs. But that's ever since I've got on Twitter. So I think the Twitter is really coming in handy. All right, guys. Well, I just do that to kill time. But we'll start looking at that on Friday because I think you guys are interested. I'd like to show you guys how I'm doing. It's essentially your station too. I don't share the money with you, but there's not enough to share. If I made a lot of money like Rod, I probably still wouldn't share the money. But I would go get unusual wells. I would get some really badass charting things and some badass option stuff, for us to mess with. I'd find better trades. It'd come back to you somehow. Part of it would come back to you somehow. All right, guys, like I said, I'm going to check over here, see if there's any comments, questions, anything like that. And then, hey, thank you, Red Sox. The best varies week. Yeah, of course. And I run it every week too. It absolutely does. And I run that down. In fact, I run that every day. We look at that lots of times. That's the new buffer report. I used to look at the buffer report every day, but that's the new buffer report because it's the same thing. It's showing you which one's getting the most upside. It doesn't really directly compare to the parent like the other one, like the buffer report does, but it's the same thing. We all want a lot of upside and a lot of yield, and that kind of shows it. So yeah, I run that every day. Sometimes I run that multiple times a day. So I guess you guys didn't have any preference on the A or the B. I guess for now, maybe I'll publish both of them, or maybe I'll just switch it to B. I think B is fine because COIW is still fifth. Remember my last formulation had COIW like 35th or something. It was ridiculous because I was focusing on balance too much. I was over focusing on safety. You can be overly focused on safety, but anyway. All right. So let's see what Mark's saying. Mike, none of the high yield stuff is really long-term hold. Yeah, I agree with that. Especially the ultra high yield stuff. You could probably hold T-SPY for a long time and iSPY and triple QI and maybe even SPY-T. I don't know, but yeah, the other ones are especially the single stock ones are case by case basis, tactical use, definitely. All right, guys, I will talk to you later. I'm just making sure. Oh, Mike, what are you saying here? What's your top weekly pair? I'll just go to the max factor. Which one's the best on the max factor? Long-term hold, I'm going to defer on because the max factor, I change that all the time. But for right now, it's NVDW is a weekly pay. There you go. And if you want a little bit more risk, you got COIW, one of those two. Get 50% of each. Now, they aren't hold forever, but they're the ones that are doing well right now. If you can deal with 35% yield, COIW, one of them has, NVDW has 35% yield. COIW has 40%. They're both really good. COIW has more NAV return, but NVDW has 55%. That's not too bad. It's not as good as 80%, but we'll take it, right? All right, guys. Thanks for being here. Thanks for listening to my Twitter, if anyone did. And I know a few people did. I talked to you already. Anyway, have a good one, and I'll talk to you later.